Good day, this is your European Open briefing for Friday, September 2nd. My name is Michael Florentiades, I'm the Chief Economist here at XM.com, and these are the key points you should know about today. The dollar tumbled ahead of the employment report on disappointing ISM manufacturing survey. The pound, on the other hand, rallied on a strong rebound in the manufacturing PMI. Oil dropped more. Oil is heading for major losses this week. And in the calendar, we have UK construction PMI later this morning. The US employment report, of course, during the US Open, and international trade, as well as factory orders a bit later. So, as you can see, this is a sharp drop by the dollar index right after the announcement of a disappointing ISM manufacturing PMI. It came in at 49.4 versus 52, well, that was expected, and the 52.6 previous number. We'll have a look at the chart in the next slide. This is the lowest number since February. This is not good news for the dollar, as this is not the type of news that the Fed can use to raise rates. Okay, it's only 1 month's reading, it's survey data, but in the past the ISM has correlated well with GDP growth. It's worth mentioning that vehicle sales also missed estimates. Here in this chart you can see the sharp deterioration in the ISM manufacturing index from a peak of 53.2 in June. Still, one can say it's well off the low of the 48 level of November 2015, January 2016, this type. But you know, this past couple of months are showing some downtrend. On to the pound, we saw the pound rallying very strongly. The pound, especially a strong performer against the Japanese yen. Here we are looking at it versus the US dollar. It's near a 1 month high. It's the highest since August 3rd against the US currency. So the UK data has been coming in better lately, and yesterday's manufacturing PMI jumped from 48.2 in July, right in the aftermath of Brexit, to 53.3. This was far higher than expectations of a smaller rebound to 49. Now, the strength of this number could affect the Bank of England's stimulus plans and maybe push it towards a more wait-and-see approach rather than going ahead with extra stimulus right away. So this was good news for the pound. Now on to oil, our other big mover. Oil is having an extremely bad week. It's the worst week since January. We had bigger than expected US inventory build, the bad ISM report yesterday, weak momentum overall in the oil market, oversupply, news that the big producers are pumping as much as they can at record levels. And I think there are also few signs there will be an output cut by the major producers. It's worth mentioning that other markets were not as moved. We had the US 10-year yield rising slightly despite the weak ISM, and stocks were more or less flat in anticipation of the non-farm payrolls. Of course, one could argue that it's really the employment report is much more important than the ISM in this case, so that's the big number that the markets will be watching. On to today's calendar. As we said, we have UK construction PMI. It will be very interesting to watch. There again, economists are expecting a small rebound to 46.1 from 45.9. So it will be interesting to see whether it will also surprise as much as the manufacturing PMI yesterday. On to non-farm payrolls, they are expected to rise by 180,000. During August, unemployment is expected to have dropped to 4.8%. Average earnings to cool to 0.2% from 0.3% the previous week. We also have international trade, expected deficit of minus 42.7 billion for July, and factory orders for July up, expected up by 2%. Sorry. So that's all from me today. Thank you very much for watching and have a great day.